Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate you stopping by today. We got a lot to talk about. Um, so grab a pen and piece of paper, take a couple of notes. Be sure to review this stream. This is all about integrating Bookmap order flow tools with auction market theory using the volume profile to overlay structured trades on that you can learn in the Bookmap Discord Trader Lab community. The Trader Lab is a community of like-minded traders who come together to leverage their collective experience. It's about the business of trading. If you're looking to create sustainability in this, you might have to realign your thinking to what this business actually is. It's not a video game. It's not a dopamine fix. It is very much intentional behavior when structure and trades that you have vetted show up. And then the outcome of every trade is random. We're in a random environment. That environment triggers fear because of uncertainty. So then our nature is to look for certainty in an environment where it doesn't exist. So we have to change what we want to accomplish here by not seeking to, and I think of it this way, to bend trading to our psychological, emotional needs. We have to actually change ourselves to the environment we're operating in. And the purpose of Trader Lab is to help you understand the business. And I have shared 60 PDFs of structured trades, and there's no such thing as plug and play. It's a place where you can start to reverse engineer the process or a process and then measure that process specifically when certain conditions show up and see if you actually can extract a statistical edge that favors you versus the other participants. And like everything in business, whether it's taking stops or overhead and cost of production, again, you do have to reframe what it really is that's going on. Not how you feel about it, which is, we're all wired for that, but what the business is. And the object of me creating Trader Lab is just to help traders understand it and maybe help you move the ball forward. There's no secret sauce. There's no holy grail. If it existed, we all would have been there. We all would have done it, and we'd all have ATMs in the basement. So if that's not the case for you, and it never was for anyone I know who does this in a sustainable way, then you might want to visit Trader Lab. And it's available to everyone at no cost in the Bookmap Discord community. And there's a link in the bottom of YouTube if you're inclined. Now let's get going. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get there, we'll talk. By the way, just as a quick reminder, there's a Black Friday sale going on at Bookmap. It's the best sale of the year. If you ever thought about getting your toe in the order flow water, this would be the time to think about it. Go to bookmap.com. There's a number of different configurations. You can even stick your toe in on a month-to-month basis. See what it's all about. See why order flow might give you an edge in the market. But like everything, there is no plug and play. When you have a high-tier tool, you have to invest in your own development. And one thing about Bookmap, they support their traders. There's a lot of education going on, courses you can take on developing and understanding an order flow, an extensive knowledge base, and a lot more, not to mention regular ongoing webinars with real market integration. Now, as you've been following this stream, you know that we've had a lot of activity, FOMC and such, and a lot of volatility, a lot of opportunity, and of course, with opportunity comes risk. I'm going to dive right into it. If you have questions and you're visiting in YouTube, throw them in there. I'll do my best. If I can't get back to you, use the link in the bottom of YouTube. You can visit Trader Lab. There's no cost for it. It's a great community, but it's for serious traders. It's not romper room. No offense to anyone who wants to have a good time, but this is business. So we always have time for a good time, but when we're doing business, that's what this is all about. And welcome to Trader Lab, and thanks for visiting me today. And if you're in YouTube, if you find this interesting, please give a like. It is the only thing that I ask in return for me doing this stream. Now, this is yesterday. Now, yesterday, the objective, now, the way the market tends to work, now, this is day before yesterday, I should say. We had FOMC day. We went down, grabbed some stops in the morning. You remember FOMC day, there's 2 days inside of FOMC. Pre-FOMC announcement, and for that it was shorts, and then the press conference come out, and then we got this, buyers. So then where are the stops above this swing high? Now, our target for actually this day, the longs, was there. We didn't get there. Then we have FOMC, off to the moon, Alice. And then this is another target. If we get through there, this is the next target. So now I'm going to show you. And what's below us? We have to always look at two sides. There's a gap here, and under all of these wicks or lows are sell stops, sell stops, sell stops. Why? The market's been going up. Having a wonderful time. This 48, if we take all of this volume, and this is what profiles are about, we're using volume. And if you think of this like shopping, high volume is a retail price. Why? You go to a store. The volume is where buyers and sellers agree. Well, at some point, and we don't know where that is, that's part of the thrill of randomness. If we find too high, we might run out of buyers. If we run out of buyers and then because the price got too high, we attract the sellers, then the longs in here can get thrown under the bus. And and we don't know when, if that's not the issue here. If it happens, where's the fuel on the opposite side? It's down here. Now, the thing is, we don't know. So it's not about knowing. We're not in the business of knowing. We are in the business of alignment. I hope that makes sense. How are you guys doing in YouTube? Are you guys conscious, or everybody pass out? Just need to check. So now, FOMC day after. So our target yesterday was to get into the stops up here, and then the next outside edge. Let's look at this like a auction inside an auction. So I'm not paying that. Yeah, but it's on sale. Retail. Stops over this high. If I get into the stops up here, my next outside edge is here. Now, if you guys paid attention yesterday, this last move up happened after the cash close. So we really couldn't participate in it. But what it did is, once we got up here, it set up the potential for continuation buying this morning and a potential target here. So coming in this morning, for me at least, my orientation was long continuation trades, continue with this, possibly get here, and eventually maybe out the top or not. Not the point. That's the plan. Then we'll see what changes. Now, I have to point out something else to you. If you remember yesterday, in the morning, it was shorts. This is where, so I showed, and you can watch yesterday's stream, their overnight volume point of control was right where this black line is. So I took a short here, and the goal then was to get the stops under FOMC low. Well, it got there. C'est la guerre. Now, here's an important element. This is where it changed. So I was looking to get, so basically it was shorts from here. I had one other short before. That was fine. Squeezed out the opening swing high. I'm just giving you a quick synopsis. Go back and watch yesterday's stream. So you can see how you can navigate this. Not predict it, navigate. Overnight volume point of control is right here, which is the retail price from the last auction, ETH. And this is called a single. Think of it like support and resistance. And we had liquidity from Bookmap in the order flow. So we had what's called the confluence of locations with probabilities. So this was a short, and the idea was to go there. Well, it got there. Say look here. Now, it rotated here, and this was a separate distribution. This low volume is what separated this from this. So it was this. And we got aggressive buying off the low. My next trade was a short up in here, and it just blew right through it. At that point, off the shorts, and then I had no way to get long. So my plan says, once the context changes, I don't take any shorts. I have to wait, and then I took longs. And it's called mean reversion. They're long continuation trades, and off you go. And then it's this. Now, yesterday, The volume point of control or highest volume was here at 07. And coming in today, there's a high probability we're going to get there, and we're going to test either yesterday's high or low. Given the lay of the land, I was leaning towards this. So let's see what happens. And there's more. You're going, yeah, there's more? Yeah, there's more. Now, this is going to be the RTH. Let me see if I can show you something interesting here. See if I can. I'm going to try to find it. Hold on. Can't find it. You know, these with this drop, a lot of these charts are kind of twisted, you might say. Okay, let's come back to today. Now, initially, I always come in with an idea of what the market might do, not, of course, what it will do. I know we all want to predict, and that's a wonderful thing, but not so much. This is the highest volume price from yesterday's RTH. There's approximately a 68%-ish probability we're going to tag it. Who knows? Overnight volume point of control is the retail price from the ETH highest volume. So pretty much, and settlement. So everything is suggesting the possibility of tagging this, tagging that. Okay. And yesterday's high. So when I come in, I'm going, okay, I'm going to get long. Fine. Now, here's another element you need to know. I don't know if I can show this to you. Yeah, I think I can. Hold on. I got to show you this. This is called the low volume zone. And the ETH low tested this area. And I got to show it to you because this is part of the structure that sets up longs. If I can find it. Hold on, guys. This is a separated the distance. Now here, there's low volume, and this is where things change for me. Remember, up. Okay. Then we have low volume here, and the market ran away. This is the retail price. In here is the separation between what's called the distribution. So these are auctions. Too low, too high, retail. Oh, it's too low. Hasta la vista, we'll see you. This is a dividing line where this at 70 was too low. I marked 70 on my chart because it's a last auction that was too low, and I broke away from it. The message or the language of the market is too low. All right. Then this, acceleration up. Now remember, my last short yesterday was here, and it got to there. That's life in the fast lane. No prediction, alignment. Now this is important. So I know yesterday in the RTH, this is an outside edge, and I found my buyers down here. And now my retail price is here. This brings me into today. Now I have to go back to the ETH to show you how this all fits together. That low volume zone is here. Notice where the ETH low is. It's on the outside edge. So initially coming in, I'm going based on my plan, retail price ETH, retail price yesterday's RTH, ETH high, and we already checked our outside edge from yesterday. Low volume zone, ETH low. What does that say to me? Tom, get long. Okay. Is everybody with me so far? How we doing? Okay, does it make sense? How we doing in YouTube? Are you guys conscious? I hear the thud again on the desk. It's you guys passing out. By the way, please give a like if you're visiting in YouTube. Support the channel. There's no cost for this, and neither is there any cost for TraderLab. Now, this is called VPOC migration. I made these things up. I started with market profile in the mid 80s. It was market profile. Today we have volume, but back in the Stone Age, we didn't have volume. We had time. So I'm just saying. So I've been doing this a long time. And the thing is, I was indicator driven just like you. In fact, when I started in the business, indicators were a new thing. in the sense of Wells Wilder. And you know about Wells Wilder, RSI, ADX, DMI, right? And then we had our standard classical bar charting, head and shoulders, and the rest of it. And that's where I started. And I went on this quest for being certain, predicting, etc. And I think we all do that, unless you're fortunate to have some education. When I started, there was no education. It was just get a book, and I went to CME to get educated on bar charts, and we had no candles. So I learned measured moves and the rest of it. So that to me is predictive, right? Anyway, that's where I started. This is the RTH Open, 8:30 Central Time. Now I'm going to show you a couple trades. I'm actually going to show you the long. Now, I'm going to show you some trades that are advanced and are nothing you should be doing. But I like to show the open because the open is where you see a micro process in high speed. And if you can learn speed reading, now what is this? The auction is a language. It is not the volume profile is not an indicator. It's just a indication of volume, because price is not the same. Prices are not equal. More volume here is not the same as when the volume dries up over here, right? So when you go to a store, prices are not equal. If a price is too high, buyers are not going to pay it. If the price goes on sale, you're going to get demand and you're going to throw more in the cart, but the sellers are going to keep it on sale until, they determine that they've either moved enough inventory or they start pulling that inventory and you start paying higher price until you get to like an equilibrium. In the market, we're doing the same thing, but in micro time frames. Your store, it doesn't change much, right? You go to a store, aren't the prices pretty much the same? Well, these are all like stores. I only use this analogy because you already know how to shop. Trading is shopping in a compressed time frame and very quickly. So we don't have time to ponder the price. We do have time to anticipate. And I always say you have to anticipate to participate, but you cannot predict. There's a big difference. You need to define what changes. And when the market doesn't do what you think it might do, not will do, might do, then you have to recognize and define change. So let's look at this. What do I know? I know my ETH low is here. I have resting liquidity here, and I have this low volume zone. I already know there was demand here, and I know yesterday that it was an important area that I went through. This is what I know before the market opens. Now I'm going to show you microstructure, and it's not to say what you should do. This is about narrating the language of the market. This is a foreign language. If you've ever learned a foreign language or a musical instrument, this is similar because we're learning to read the behavior using order flow and overlaying structure, like I showed you at the top of the stream, and I do pretty much the same thing every time. I'm sharing process. I do not know what the market's going to do. It's not my business. It's not my job. I know my job is to align with the market. And when I get out of alignment or have a poor trade location, I take a stop. I don't like it. But guess what? Overhead and cost of production. You want to be in business? Guess what? You're going to pay bills. So we have to get over it. It's not your emotional attachment to getting approval and showing everybody how smart you are. That's not it. You don't get that here. Ask your significant other for that. Here, it's business. So you have to know what you'll do when it shows up. You have to be willing to take a stop because that's what it takes. You got to take risk in order to get reward. And you have to control your emotional states, which is difficult because of the chemicals released in your brain. Now, let's get into the first trade. For me, I'm looking for longs. Now, I'm going to show you some ideas, but I want to differentiate between what is a long trade and what is a counter rotation. This is important, okay? Let's watch. So, RTH open. What are we doing? We're looking for longs. Why? ETH low here, resting liquidity, 90% probability, over 98% probability that we're going to take out either the ETH high or low, 97% You have to bet these for yourself. Taking out the previous high or low, 87%. Getting to the overnight volume point of control, 80%. It's above us. Getting to, so we have an 80% probability of getting there. And we have a settlement. Lost it. 74% probability. Point of control, 68%. I would say, based on this, that we have the possibility of going here and here. So my first trades, if they are longs, are going here. Low-hanging fruit, high probability trend up. Is everybody with me? Let's watch. So now I'm going to show you an advanced concept. And I always suggest developing traders don't trade here. This requires something called unconscious competence. There's no time to think. This is 10 seconds in. If you're not competent in an unconscious fashion, you're going to be chasing the market, FOMO, and you'll not be in a good location. So it's a place to learn speed reading. And you do that in replays. Slow it down and then gradually speed it up. This is almost like, batting practice. And they're getting fast pitches, and the automatic machine is throwing them at you. Start slow, speed it up, until you force yourself. And it's a different element. Navigate this, read it, don't trade it. Let's look at it, the microstructure. Now remember, the orientation is to get long. What do I know? This is how order flow can help you. I know if I look at the limit order book, I have more liquidity sitting here and I got some along here, but this is where the slug of liquidity is in alignment. Okay. This is important. And it's the top edge of that low volume. I'm spending time here because if you don't understand why, what good does it do you? And it doesn't mean it will. It only means it might. Now let me show you. So RTH open, clueless. This yellow line is called the developing volume point of control. Remember shopping. It starts at 0 at the RTH open, and this is your, quote, retail price. So what's too high, what's too low? I don't know. Do you? No. What do I know? Too low in the ETH, and I got this. So that's what I know. That's all I know. And I know I have a 98% probability to take ETH high or low. So I know I got support here. That's all I know. So I see my sellers, and I'm looking for longs. And now I cross, and this is now a developing volume point of control. It shifts down. I made up a term for this. I call it a variable high volume node. When I first came up with this stuff, and this is a long time ago, I was in a chat room, and we didn't have Discord back then, but I forget what it was called, but it was an early chat thing. And I was with market profile traders, and I started observing behavior. And this was just as we were getting our hands on volume. And I saw these volume points of control shift, and I was going, well, that's interesting. What does it mean? And I started pointing this stuff out. And have you ever been somewhere where people criticize you because you're not doing what you're supposed to do? So I got a lot of criticism and pushback. I said, this is interesting. What does it mean? What does this say? Well, I started thinking differently, and I got a lot of pushback because I thought differently. You're not supposed to do it this way. And I learned it the same way they did from the guy who created it, Peter Stottlemyre. And he actually taught me market profile, and I couldn't trade with it because I took it literally. And I think when you learn something, you take it literally, but I didn't understand what it meant. That took a long time for me. I read all the books. I did all that. And when I learned market profile, I actually had to go sit at a desk over at the CBOT. Anyway, he was a floor trader, grain trader at CBOT, just so you know. Anyway, too low. Liquidity comes in. Now I'm looking at this and I'm going, well, this might be too low. This is the new retail price. What I'm looking for is continuation higher. So here I'm looking at longs. Now I break here. What the market needs to do is go up. This is support. I'm under here. This is now too high, variable high volume node. So this is my resistance. I'll get past this very quickly. I'm doing this because I'm showing you how I read the market. And I'm not using any indicators. I'm just reading participant behavior because what is it? Shopping. So as you guys think of multiple time frames, I'm not using the clock because what I do, and basically trading, in my opinion, is not regulated by a clock. We don't have a stopwatch on the market, do we? So let's take a look. So too high, break, break, too high, resistance. Here, break. This is support. This is resistance, retail price. If it's too high, I can go lower. I do know I have this. Now, if I'm an aggressive trader and I want to trade a short time frame, I can take a short. If I'm aggressive on the long, if I take a long, this is the outside edge. Does that fit? Up to you. Me, it's not a good place. Too high, new retail price. So I have support, support, resistance, support, break low, resistance, break low, resistance, resistance, break low, resistance, break low. What's going on? Now, watch. This is our target area right here, right there. We get a sweep. Now, this is hard to get on. Let's look at it. A sweep into liquidity, and this sets up a long. Now, this, if you can't get on this, then you don't have a trade. It's nothing more to think about. So let's watch. Now, sometimes, if you don't have a way into a trade, there's nothing to do. Let's look at this. Where was our support? Let's come back. The long was going to be here. Missed it. Where's my next opportunity? It's there and there. This is my support. I get a sweep. Notice the similarity. Sweep, reverse. Support, sweep, and then going for this. Okay? Long. Risk neutral, VPOC migration, going to the moon. Everything's looking great. I got high probability to get here and above and looking for yesterday's high. Okay, that's the long, just saying. Now this totally out of left field. This would take you out of your long, and it's like, what's going on? Right here, for me, was maybe something is wrong. I thought maybe it was news or it was just a big seller. No clue. Right here, it was what's going on. But here's what I know. This was support. This was support. I break below it. I need to be coming back. Watch. What do I know? This is now resistance. This was the retail price. I get this seller, go on the floor. This is support. This shifts down. Right here, it's got to regain this to continue higher. And I don't know right here. I was actually thinking, was there news? Because this looked like it came out of left field, and it did. So this is support, resistance. I break below. Once I'm below this and value or high volume, think retail price in the store, that's too high. And this, which was support right here. So I have resistance, resistance, break low, resistance, resistance. This sets a short up. Then you're trying to get back here. And if I can get into this LVN zone, it's we'll see you later. Friday also a possibility of selling and long liquidation. Let's watch. Where do we come back? Watch where we come back. Right there. And you get your mid and your VWAP. Now, right here is that's resistance. Now, I'm not a big fan of the mid and the VWAP. Not a big fan. Why? Because we can get mechanical sellers. And if so, if we rotate out, we can squeeze them. So it's just something I do. It doesn't mean you shouldn't do it. It's not anything more. So we come to the mid. Break low. Right here, this is the test. This is my resistance. If I hook out the stops here, I'm just telling you the way I think, not saying it's right. You have to vet everything. I'm looking for a test here. I get another VPOC migration. What is the language? Too high. This sets up another short. So you could short this. This I take a pass on. You could short this. Everything, the language is saying too high, too high, too high, and the volume or the retail price is moving lower. Once that happens, then they say, put your helmet on. Now, we had a price down around 70, which is on my chart right here. This was where we lifted off on yesterday, where things changed. So at 70, I can anticipate behavior. So I have a sweep, 70. I'm outside this low volume zone from yesterday, and it looks to me like long liquidation. Now, let's come back. So shorts only, no longs for me. This is yesterday. So this is what we had. This is the retail price. We never got there. From yesterday, highest volume in the RTH. If I come down, all the stops then are under, and I have a high probability. Remember, taking yesterday's high or low, and I was thinking the high until it's not, 87%. If I'm working with an 87% probability of one or the other, and I see long liquidation on a Friday after this kind of move, here's what it says. Let's look at language. There's longs in here. There's longs in here. There's sell stops all the way down. And the shorts, the sell stops are under here, under here, under here, under here, and there's a gap. And this is the last retail price all the way down here. I can't say it'll go there. It's not my job. My job is to align. Also, 12.5 is an outside edge. Let me go up in time frame as you think of it. I'm not paying that. Who knows? Down here. Oh, it's on sale. And then we get this. In this distribution of volume, going up to an intermediate time frame, and if you find this confusing, it's okay. I was confused for a long time with this because it's integrated. Think of a vertical integration of time frame. You think of time. For me, it's a little different. I think of volume, but it's really similar until you get into the intraday developing time frame, and then there's no time. It's behavior. At least that's the way I look at it. If I know there's sell stops here, isn't it possible then that I can come down and get these guys because all these longs have not been abused properly, and market goes up to go down and goes down to go up. Now here's the next piece. In the intermediate time frame, this is the highest volume, and it's at 48. 48 becomes a potential target because the market is attracted to high volume in all time frames. That's why this was a target, and it had about a 70%, 68% probability. If you don't do something, then what? Then this, and, put a helmet on. But that sets it up. So this is that location, the 47, 48. That's the next target. And you could be done with the trade there. For me, I don't have a problem with this. This puts pizza on the table. Watch. Now, we come into the location. We have yesterday's low here with an 87% probability-ish. It is now something, we have something here called the IB, or initial balance. There's a over 90% probability we take out the first hour's high or low. I'm going to go out on a limb and say it's probably going to be the first hour's low. What do you think? That's called the initial balance. It's an old concept from market profile days. And statistically, it's very valid. So, and that sets at 9:30. So it was right there. Now we have two trades in TraderLab. Don't forget, target was here. So what do you do? Here's what you might do. And this is subject to trade plan. You could be done with the trade there. You could just take it and go, I'm done. But what do we know? We got longs in the market. We got Friday. We got what? Yesterday's low. And we have the stops below us. That's why they're on the chart. So for me, there's no longs. Now, there are some traders who are going to take a long here. And this is what I call a counter trend trade. Now, it's a time frame based thing, you know? So let's see what it does here. So we take out the IB low, and notice where the low is. It's right at a key level, which you already know about. We know about in TraderLab. Here's what we also know in TraderLab. We don't know what's going to happen ever, but we can anticipate behavior. Some traders are going to take a profit here. That's all trade plan specific. Why? Because we're coming back to a retail price in a higher time frame. But don't forget, sell stops are under yesterday's low. So you have to kind of think about, where's the fuel? I call it fuel. Years back, many years ago, I built trading systems because I was managing funds, and I was a trend follower. There's no day trading here at the time. You know, I was across a lot of asset classes, so I had to build systems. I actually designed a system I called it, it's a crazy name, but I made a name for it, called Paper Chase. Down on the floor, wherever the paper was, the market would often trade into, and that would be stops. So where's the paper? So the paper's the stops. So what I did is I created a system that was built to trade into stops, and I called it Fuel. And for me, short time frame was 15 minutes. And we didn't even have data back then. What you had to do is buy data on a disk so you could run tests. So it was really archaic, but that's what I did. So a long time ago, mid-'80s. But target, notice what happens. Now we reverse. Now I know I got the fuel. Remember, paper chase. Where's my outside edge? Now this is where it gets interesting. We have two trades in TraderLab. One is called the IB failure. I had to make a name up for it. It is a reversion trade. It's a reversal. And depending on certain conditions, it's a long. Well, there's two ways you can use it here. If you're a counter trend trader, you can certainly take a long. But if you're trading with the trend, which let's say might be down, depending on time frame, then you could cover your trade on the IB failure on this, not get long, again, unless you're counter trend, and then you look outside and you go, where? Here, let's come back to the way it was at the time so we could actually see what we had at the time. Here's what we have. I'm going to show you, this is how this profile can work if you can read. Remember, this is a language. You want to speak a foreign language? You are not going to do it in 5 minutes. There's no crash course. Now I'm going to take you to microstructure. Sellers are here. Buyers are here. Sweep suggests counter rotation into this. If I go over here, I've got my buyers there. There's the absorption. If I break low, this is too high. Mini mark, break low. I'm not paying that. Leave the store. Sweep, what's the possibility? Not predicting. Counter rotation. Where were my sellers? They were there. If I break low, where are my sellers? They're there. If I get this, I get my sellers here. That's absorption. I got sellers there. I got sellers there. I don't know. Now I do the Chopateria. What is this? It's a consolidation. I move up here. I've got liquidity. No clue. Break low. I got sellers here. What's too high? This micro structure right there. Break low. Where were my buyers? There. There's absorption. And up here, I got my sellers. Break low. If I draw a little box, now I'm not drawing these boxes while I'm trading. Apparently I can't do that, but I want you to see where the sellers take control and where the buyers were here. Think of that like support. Sellers take over. This is resistance. All these are possibilities for continuation or more likely trade management, okay? Because what I'm doing is these are microstructures. Break low, too high. There's a structure here. Sellers are here. Buyers are here. Break low, too high. And you can see the little nodes there. I just want to show it to you. Now, when I go up in a time frame and I get this break, this acceleration, and it's not yet 9:30, so this isn't in yet. This acceleration leaves this low volume area. So think of this like shopping. I'm not paying that. Yeah, but it's on sale. It's on sale. You're crazy. High volume. And if I leave it, it says potentially too high. Otherwise, why wouldn't I just come around and go up the other way? Well, I don't. All right. And where's my fuel? Don't forget, under here. So I'm looking, if I'm not short or I want to add, subject to my plan, and now we get the IBF, which is the counter rotation. Either I'm done, key location, and I can anticipate either a reversal. Don't ask me why. It can, but why would the longs be hanging out here? Wouldn't you get out of Dodge with a 60-point counter rotation? Do you think it's a place to get long? Me, not so much. So where's my sellers and where's my outside edge? It's going to be out here someplace. So at 9:30, I get the IB, and I have, again, two trades. I have something called the IB continuation trade, which is to go for this, or IBF, mean reversion, and my outside edge is going to be up here somewhere. Part of the thrill is there. I also can have it here. Let's look. So what do I know? This is too high. This is too high. This is too high. So I can look out here potentially for continuation short, and I don't know exactly where. You know, this is part of the thrill of randomness. I know if this is, since I fell away from this, that it's possible, and I'm under 70, which was important yesterday, that if I come out, I can come back here and then go here. So that's my trade. Just saying. Let's look. Outside edge, okay? Sellers are here. Now I get VPOC migration. Remember what happened at the top? VPOC migration. What does it say? Language? What's above me is too high. I got 70 from yesterday, maybe too high. My sellers took control over here, and this is my retail price. This is called mean reversion. If it comes outside, if this is the retail price, let's go back to the shopping experience. Where's the price too high? If it gets too high and I run out of buyers, and maybe this is a short squeeze, market goes up to go down or rotates over itself, I can sell it to come here, go there, and then wherever. And the wherever is unknown. Let's watch. Popo, there's no long and the trend's down. This is not mechanical. This is contextual. Outside edge. Remember where the selling was. The last selling was up in here. There's my leg down. Counter rotation. VPOC migration. Outside edge. Outside edge. And it's an area. If, by the way, if you get short anywhere in here, this is where it fails. Why? Because it was rejected. It is too high. And there's my test. I know my sellers are here, there. So if I come back across the range, no matter where I sell this thing, this is the last area where the buyers failed. So then it's here to scale and then wherever. And now it's trade management. And now we're taking the stops out. Is everybody with me? How we doing in YouTube? You guys getting some out of this? Now let's watch. Now there's more. Watch. So right here, we get what? Let me come back. Hold it. So 930, we had a short, right? If we get VPOC migration, what's familiar about this? What does that say? Too high. What else? Well, if we think we're doing the Acapulco cliff dive, which I would say yes, and the longs that are in here are basically under the bus, I can keep taking continuation shorts at the time. So this is a continuation short if it fits your plan. But this is very aggressive now, okay? So it's up to you. Now, I have other targets down below. I've got to see where they are. Oh, this is a target here. And then the gap and this. So these are all on the chart I showed you at the top of the stream. And again, I never know when, where, what, if. So let's come back and look at the structure. Got to get this. Hold on. Getting some big sweeps here. We're under yesterday's low. If you break and you test yesterday's low and you're at an outside edge, again, this is reversion. You have to understand reversion. You also, when you break here and you test, you're below here, below the IB, you're below yesterday's low, you're at a range. This is a continuation short, but you have to vet this. This is a bit different, okay? You now have this as a key target. Let me show you where it came from and potentially fill the gap down below. So this is this target. The stops are under here. And then the possibility is there's this gap and to go here. So those were, and this is today, okay? So those were possibilities. Now, the thing to understand about trading, you got to manage your trade. You cannot predict what will happen. So the plan is what guides you, not saying it will do this, it will do that. I certainly have no idea what it'll do. I do know where it might do it. And I also can recognize when it doesn't do something. And if it doesn't do something, then I have to ask myself, based on the plan I already have I defined change? So what I have here is the range. I break out of yesterday's range and look what happens. I test it. Now, and let me come back. I got to show you before this happens. Remember, now I am doing this in hindsight. We get into real time, we can talk. And if you're interested in this kind of real-time narration, if you come to Trader Lab, and you can use that link in the bottom of YouTube if you're visiting, and there's no cost for Trader Lab, there's a library of webinars, and there's some in there up to 4.5 hours long of real-time narration. So you could see this in real time over and over and over again. And you'll see stops getting taken at, you'll see me getting, blasted like everybody else. It's just the real world. That's it. So let's look at this. So yesterday's range. So anyway, the idea of getting the short continuation trades is to get down to here and to get lower. Okay. So let's get going here. So yesterday's low break. Now this break sets up something called a low volume area, and it's because of acceleration. It's this. So if I want to get short, I know based on this that this is an outside edge in its acceleration. This is a separate distribution. I know I'm outside a range, so I can look. So I can, first of all, here, let me come back again. I know this is not auction. This is ripped. So I can come outside. I know this is my outside edge now. And I can squeeze, I can do anything. This is part of the thrill. We don't know. So let's see what structure might look like. I have a sweep here. This suggests the potential for a counter rotation. Let's watch this very carefully. Now I'm using order flow and I'm overlaying it on this. So this is now a micro retail price, high volume, and interacted with icebergs, and I have a sweep. Sell sweep suggests counter rotation. So, and I can come up somewhere, and I don't know. I do know I have more stops below me. So as long as I'm in a liquidating market, I can also trade down to here, and I have a target down at 12 and lower. Who knows? Great. An iguana just jumped onto a tree from here. Amazing. Sell sweep suggests up. Buy sweep suggests down. This is really advanced, so let's assume nobody's going to get involved in this. But subject to your understanding, you could take a continuation short. Now, this is very aggressive. And the reason is this, 12. 12 is an outside edge. Let me bring it back again. So part of being in this business is already knowing where these areas of interest might be. It's not predictive, but here's what I know. There's stops under all these levels, right? Why wouldn't I try to get into the sell stops? I have sellers built in here. So if I have sellers, I want to be a seller at a higher level to take advantage of the long liquidation. So for me, it's only shorts. I could not imagine getting long in my time frame. All right. That's just me. I'm not saying, what anybody should do. They do their thing. For me, in this condition, I just take the shorts, and if I could take it out of the short or it's over, then I go back in the Barca lounger. Other traders are going to trade both sides. I'm just saying. But this is on the chart, 12. And the reason it's here is because in the higher time frame, it's an outside edge. And underneath outside edges are stops and the gap. And so I know I can go here, and I'm not saying it won't go there, and I'm also not saying it will. I'm saying it might. That's all you got. Maybe. Remember, where was it? Here. Break low. I'm outside of yesterday's range. So this is a test. Break. Let's look at a potential short. Not saying it is. I'm saying it's something to think about. Where were the buyers? And I have a sweep. Remember, I'm putting pieces together. Sweep, downtrend, under yesterday's low, break. Now what? Where? Man, these iguanas. An iguana's a lizard. You might know that. But these guys can get really big. Like, this is not your pet. Buyers were here. Sellers take control. This is absorption. Break low. This is resistance in this area. Advanced concept, not something anybody ought to do, but just read it. That's all you need to be doing is reading it. Comes down, location, and stops. Okay? I'm not saying this is anything anybody ought to do. Somebody might. You don't have to do anything. Watch. This is a target, right? Sweep. So I had a sweep here. I get a counter rotation. I get a sweep here, and I'm at a target, and I'm into stops. I have more stops below. Do we know where the low of the day is? No. Do you? DM me. Let me know. I have no clue. VPOC migration. What does this say? New retail price. How might this work? What I can do here is, if I think it's going lower, if I'm outside of yesterday's range, I have the possibility of continuation shorts and reversion trades for continuation. So now, if this is the retail price, how do I trade this? Two possibilities. If this is too high, I continue down. If it's not too high, I come across, I squeeze, and then I look for reversion to return here and to potentially go lower. That's how you trade it. What happens? Clueless. Watch. This is too high. Now, this turns out to be the low of day. There's no way to know, okay? So for me, I have two ways to trade this. I have sellers here, VPOC migration. Now this, as you're getting lower and you've gotten this, you're starting to press it a little bit, okay? But I wouldn't know. So I could tell you I'm very comfortable not pressing it. It just doesn't matter. I personally am very detached. That's just me. So this is VPOC migration, and in a trending environment, this can be a short. You have to understand the behavior is subject to the context. This is not mechanical. For me, I'm only taking shorts. If I'm going to get short, it's continuation trades. I do not get long. Other traders are going to get long, and they certainly deserve whatever they get from that, because they must have an edge. If you don't have an edge, then not. So where's my resistance? Isn't it out here? So for me, my next trade is going to be out in here for what's called what? Mean reversion. There's the mean. So I only can take continuation shorts in my plan. Not saying it's a good plan. It's just a plan. And there it is. See? To go there and then maybe fall out the bottom. But this is the primary objective. Now, this is very important. We just got VPOC migration. This now is support. If I reverse out of here, not a recommendation, trade's over. So for me, outside in. Does that make sense? Now, here's the other thing. You have to anticipate the trades. You can't predict them. And so when I'm looking at this, let's look. So what I have here is absorption here, buyers in control. Support is there. Buyers, I get a sweep. What does a sweep tell me? Up. I get a buy sweep. What does it tell me? Down. What does it do? It continues up. What happens here? Where am I? Yesterday's low. What do I anticipate? Test. Outside edge. And this is where it gets funky. Where is the outside? Now we have a couple trades here. We have VWAP to VPOC, which is a reversion trade. And this is reversion. Let's look at the trigger. And again, you have to be skilled at this. And if it's not your trade, if that's your trade, you don't have a trade. And it's not a big deal. If you're chasing this thing because of FOMO, you'll put yourself out of business. One trade is, you have to look at this in a perspective that in a trading career, I've taken, I don't even know, 10, 20,000 trades. I couldn't even tell you. Now I'm going on 47 years of this, so, might not be a good example. Is any one trade really material? It's not. Yet we live and die on one trade. This is not the business you're in. You're in the business of edge and waiting for your trade. If this thing doesn't show up in your trade and it goes to zero and you're not in it, other than your emotional response, like somehow your career depends on this trade, it doesn't. It depends on your plan and you following it. That is how you measure yourself in this business. You don't measure yourself by P&L. Anyone who measures themselves by P&L has a psychological problem. And they really need to deal with it or they're going to have a problem. They're actually skewing the odds of them being successful against themselves on a long-term basis. So if you're out there and it's all about your P&L, you've already got a problem. And you should do some reflection on that. Ask anybody who's been doing this sustainably. This is a trigger. No clue. Watch. I don't know, but what do I know? I know I've got an outside edge. I know I've got an important location, and I know I got stops below me. That's what I know. I know the only way I can trade this is outside in, and this is a retail price. Remember the concept. I'm not paying. Where is that though? I don't know. Here's what I know. It's going to be outside. What do I know? Yesterday's range. If I test yesterday's range, either I'm going to squeeze up and come back here, which would be a short, and it's a structured trade, IB continuation trade, VWAP, and if we come up here, and it's not a recommendation, I can already tell you I'm going to be looking at a short here. And if it doesn't set up properly, then I just sit here, or I just take a stop. But in the meantime, the next location is this. So going here, looking for the short. What do I see? Trigger. Now, here's the trigger. Now, I don't know. Wouldn't I love to know? I don't know. Let me show you. The way I look at this is consolidations are auctions, mini mart. I kind of think of them like sellers are here, buyers are here, and right here I think it's doing this. What happens here? It breaks away. The sellers took control because the buyers were here. Think of this like support, and it's very simple. Support can become resistance. Now let's go down. We're in microstructure. In here is high volume. This is high volume. This is the same as that. If this is too high, right here, I'm now alignment. I'm at an outside area. I'm testing yesterday's range, and my teeth will chatter. If I break and I come back and test the retail price in here, now I'm in what you guys think of as a short time frame, and it's too high. This is mean reversion. That's the mean. In our next higher time frame, that's the mean. I'm doing the same thing in multiple time frames from different directions. So if this, because I left this, I'm not paying that. Are you sure? If it's too high, I go there. If it's not too high, I blast through and get stopped out. Target. So this trades from there either, and when this shifts, here's what's important right here. When this shifts, this will rattle me because I know if this shifts and I cross here, I'm out of the trade. If it doesn't shift, it's resistance, and this is my target. So right here, I have a target, and this is called mean reversion, underline the term mean. That's it. Now, what do? Trade management. And either I get taken out on a counter rotation, the trade's over, or I'm trailing, and this is subject to plan, and I'm going for continuation lower. It doesn't matter because that's one trade. Okay? Trade could be over here, and that's the end of it. And we're current. Ooh. So you'll notice I'm not taking a lot of trades. There are not a lot of trades that have edge. Those of you who think this is a video game or how much action or dopamine can you get, that's not how the business works. This is a strategic business. And the idea, think of it this way. The more trades you take, you're taking more risk, aren't you? Does it make sense to take less trades with more opportunity and more range? Not more trades with less range and more risk? Every time you put a trade on, you take risk. We all take stops. So I want to take a small stop as much as I can within the parameters I have for my plan. But I want to trade the rotations. It's the only way I pay for my overhead and get a yield. Me. I'm not talking about you. I'm talking about me. Is this making some sense? You guys with me? Do you have questions? Now, guys, when you think about this, now remember the trend's down. So, and again, subject to your plan. Now let's look at this. What do we know? Well, this is where your plan comes in. It's time frame specific. If I'm outside of yesterday's range, I can hang out with this and, or if this is too low, I could be out of the trade. Now, you're going to ask me, what should I do? I'm going to say is, do you know what you should do? Everybody designs a trade management process. And this is one of the things I always like to mention to developing traders. I always get asked, and you ask anybody who's been trading for any length of time who's still in the business, which is a minority, by the way. Over 90% fail. And you can certainly come to Trader Lab. You'll learn why traders fail. Because we all have to undo the habits that are created and the primal wiring. You can't change your primal wiring. You have to learn to experience your fight and flight and FOMO, but not respond to it. And that's intentional practice and statistical probabilities. If you don't have something tangible that tells you what works over a random distribution of outcomes, you're constantly going to be under control of emotions, fear. You'll go from euphoria to depression. Euphoria, depression. Is that what happens to you? Do you have to ask yourself, what should I do? Then you don't have a plan. The idea of a trade plan, guys, is not to ask the question what you should do. This is not where you ask the question. The questions are answered. Because you can't control this random rotational behavior. Do we know if it's going to get below what was too low? You see? Do we know if it's only going to come there, then return there and go lower? We can't know anything. Then we can't predict. And if we can't predict, what can we do? Have a plan that covers every eventuality, not a predictive plan, an alignment plan and a trade management plan so you know what you'll do, not what this will do. Here's what I know. I know that's my target. I know if I cross above here, it can get ugly. I know this is my support, and I know potentially it's too low. I know if I come across here that there can be trouble. How do I know that? Because I've studied it intently for years, and I've now, as best I can, detached myself from the fear that I experience in a random environment. So my fear is continually with me because of my wiring. So I don't get, and I tried for years, so behavior modification. How many of you guys, I had a rubber band on my wrist that I would snap. I wanted to be like Spock. I really wanted no feelings. I wanted to be detached. I couldn't do it. And I tried I'm saying years. It's not like, I'll try this for a few weeks, see what happens. No. Because I believed in behavior modification and works on dogs. Why wouldn't it work on me? Well, I'm not a dog. Didn't work. So I had to come up with something else. And because I couldn't overcome my emotional stimulus, my primal wiring, okay? When I couldn't overcome it, I had to accept it. Then I had to figure out, well, what can I do about it? I have to do something. So I then turned to statistics. And I said, well, I have to figure out this thing called edge. And I'd never learned about it because when I started trading in 1980, all my buddies were floor traders. All floor traders are really an anomaly. It really didn't exist. We didn't have the technology. And I just happened to, it was really by accident. When I first came in the business, I was going to be a floor trader. I was going to get a membership and the rest of it. That's where I was headed. And, but I think I'm a little bit analytical. And my buddies down on the floor, spitting in each other's face. Every now and then somebody gets stabbed with a pencil, And it was more like a street brawl in Brooklyn, where I grew up. I said, well, I've had enough of that. But these charts, this stuff is really interesting. Anyway, I kind of gravitated towards technical analysis. And I shared an office with George Lane. He created stochastics. And this was all new. So I'm just saying I didn't know what I didn't know. And I bought the concept of, look at this oscillator. This is great. That's the holy grail. Now, I didn't use the term holy grail, but I said, this is all you need, because it worked. What I didn't understand is, in spite of it all, it didn't have an edge, but it worked. So everything I was doing back then all had winning trades, but I didn't know about edge. Eventually, unfortunately, it took years. I figured out it wasn't about percentage of winners, which is what I was thinking of, because that's psychology. We already create beliefs based on what we think the business is. And you guys who are listening to this stream right now might be basing what you do on your P&L, which is a random distribution of outcomes, but you may not have an edge, which means you're leaking equity in spite of the winning trade. So I had tons of winning trades, same as you. And in spite of it all, even though I move ahead, have winning days, winning weeks, winning months, I would leak equity. So I kept tweaking, tuning. And that's when I built systems, because I wanted to, eventually we had PCs. I had an Apple IIe, high tech. George Lane, who created stochastics, had an Apple I. So I had something up on him. So you can kind of see where I was. And unfortunately, I didn't understand the business I was trying to be in. And I have to say, I didn't understand it. Part of it was nobody told me. And there was nothing written at the time about what it was. It was really classical bar charting, which I learned at CME. So I really set myself off, not intentionally, in the wrong direction, with beliefs that were not aligned with the business, and I had no clue. So I spent a lot of years. Now, the point is, you guys are doing the same thing, probably, right? James, you're asking me where the longer term volume point of control comes from. The way, and everybody, by the way, there's no right. Everybody says, what's the right way? I'm going to say, I don't know. For you, everybody kind of slices and dices this thing. It's kind of like an onion. I isolate the market in the way I do it, and this is just a way to do it. I look at swings. So a lot of traders go weekly, monthly, all this kind of thing. I don't. Because I'm not trying to impose something rigid. I want to let the market tell me based on the behavior of the participants and the distribution of volume. So I look at it a bit differently. I said, well, there was a gap here. So this is important. So I draw my profile from there, and I look at where the last high was, which is here for this one. And, if we went higher today, it would, go up there. Well, if I get below here and fill the gap, I'm then going to extend it or maybe include this. But at the moment, it hasn't done it yet. Where did I go? Under this outside edge, which is here. So I draw it from the gap to the swing high. So as this was going up, let me just pull it back for you. Hope I can grab, wrong one. Here, let me just grab this one. As these days started migrating, so in other words, all this is not in here. All we got is this. Well, there it is. It's around 40. That's the swing high. That's the swing low. Gap. Every day I move it forward. So as the volume's coming in day by day, the fair price is around 40. More volume, more volume. Hope I'm getting this right. It's a little hard to do it this way, but I want to show you how it changes. This is my high volume. So this is still the highest volume. So as it's coming in, I'm adding a day, so I can see the distribution of the volume. So as I move this, you'll see that this high volume, or that orange line, is moving around. That orange line is the highest volume in here. It's not based on time, it's based on the swing. Then inside of this, going down in time frame, as you think of it, each day has its own high volume. And high volume in your shopping experience is the retail price. Well, what did we find out? This is too high. Well, we don't know at the time. We think we're going, I thought. And the reason I'm thinking is statistics and trends up. Why wouldn't I think that? Well, if it fails, then I got to turn the barge around and go the other way, and then think about who's on the hook. And remember, Fridays, what do we know about Friday? If you're hanging out in the market and you're long, what might happen? You might take a profit. What do you think? And if the market is long, what else do we know? If the market is long and all the sell stops are piled up here, that's low-hanging fruit. Once the longs in here see this happening, they're going to hit the sell button, and all the sell stops under these lows are going to go too. It's a great opportunity for short. This is why you have to always be thinking, and I always say, where's the fuel? I call it fuel because the market will, at some point, it always will come back. The same reason it came back here. Where was the fuel? Here, the buy stops. There. And where was the fair price in this consolidation? Same as that is here. No precision. If it's too high, I do this. If I come back up, where do I come? Into the stops here, here, and there's my outside edge. No precision. Too high? No clue. If it becomes too high, then once I get rolling, where's my retail price in the intermediate time frame? It's there. And then where's my stops? It's here. And where might this thing go? There, into the gap and down there. That's it. Doesn't have to do any of it. But that's kind of the way to organize it. I hope I answered your question on why do I trade NQ? I used to be a high volume NQ trader, but it was a long time ago during what they called the dot-com bust. It was 2000 or something. So I was really, and I was a heavy duty. I just want to say I don't recommend it to anybody. Because I got to the point I was trading so large and so often, sometimes 100 trades a day. It was brain damage. And I got into a situation, just as a side note, that I had to buy a membership to cut my costs because of my volume. And it took me a while, not a long time, to go, no, I don't want to, I want to lease a seat. I'm going to change my time frame. And I'm going to slow down. I'm going to trade much less and trade bigger rotations. So I kind of went from trend follower when I was managing money to day trader. But even back then, the technology wasn't that good. I'm trying to remember. I had a DSL at the time. We didn't have fiber or anything, and it was still, modem. Before that, it was dial-ups. If you guys can remember any of that. So I've always been kind of at the edge, if you will, of new technology. Anyway, coming back to where we are at the moment, you see how it changed? Remember, retail price, new retail price. Uh-oh, right? What's this? Too low. Once you're above here, off the shorts. Now, I wasn't watching this because I was answering the question, but can you see how you might use this? By the way, there's a lot of good content in Trader Lab. By the way, Dylan, as far as do I only trade ES, let me say this. For developing traders, the key thing, I think, now you can take this process. This is really the market. You're seeing how the market works in this. This is the purest, in my opinion, again, form of, here it is. You can take, since this is basically how the market works. By the way, we got to watch out here. Remember, we have a structured trade. What was it? VWAP to VPOC. Outside edge, not a recommendation. You got to watch the IB low. So remember, I already mentioned that to you. Where was it? We had a short here, not a recommendation. This is a sweep, outside edge. You're going to have stops up here. Structured trade would be a short down to here, and then whatever. And it's not a recommendation. Look at the alignment. Let's just see what it does. This is a structured trade. Now, before you guys rush in and say, oh, this is a trade. What is a trade? Risk? No guarantee. Who knows? Let's watch. What do we know? Stops are here. Stops are there. I have a sweep. Now I'm on alert for an outside edge in alignment. I have alignment. And what else do I have? 49. What do I have? Don't I have a confluence now? Maybe. Developing somewhere? Maybe. Let me try this. 49, high volume. Micro VWAP outside edge. I'm showing you pieces. I'm putting them together. I think. There's more. Outside edge, IB, VWAP, mean reversion. It's an area. This is the low volume node. This is the micro composite volume point of control. Too high in the intermediate time frame. Outside edge, structured trade, VWAP to VPOC. Not a recommendation. It's a structured trade. Is there precision? Unfortunately, no. Why not stocks? Anything you want, Richard. They all work the same way. The E, those are executed icebergs. This is the stop an iceberg detector. Very cool. It's a tool, an add-on available in Bookmap. By the way, if you guys are interested in Bookmap, which is a high-tier order flow tool, don't forget there's a Black Friday sale going on here. I don't know about you, I like sales. Stops were here. Sweep is here. If you get short, which is not a recommendation, this is the target. You have to be conscious that you got the VWAP here and we can squeeze out. So the way I work, because I'm risk adverse, is when I put trades on, I lay them out, and the job of the first contract in this case would be to get risk neutral. So I buy my stop on my runner. And then if I get taken out, I get a ticket to the buffet and a couple cocktails, and then I put it back out again. They're areas. So if this is mean reversion, that's the mean. So what do I know? Structured trade is either out here or right here, because that's a trigger. And then I have to look where's stops under this swing. So what I tend to do in all time frames, as you'd think of it, or fractals or microstructure or rotations, I trade into who's ever on the other side. It's low-hanging fruit. So there's stops here. If I get short, it has to be right here, right here. I need a couple of points to get risk neutral, which I would have. And then if I get squeezed out, I'm just going to put the same trade back out again from another location. My target is here. That's called mean reversion. Mean, underlined because you're trying to pick an outside edge, and that's the challenge in this. By the way, the challenge exists in every trade because you can't pick the high and the low. We won't know until we define what a trigger is, and we also define where a location is to look for the trigger. And the answer on the stocks is yes, it works on any market. Stocks, options, anything. It's all time frame related. This process that I'm sharing, you could just be trading the higher time frame with this. It doesn't matter. So all markets operate the same under the same mechanics. It's shopping, too high, too low, whatever. So if you trade stocks, it's all the same. You use Bookmap, you use order flow tool. You can see the market makers and the liquidity resting in the book, right? You'll be able to see that with Bookmap. You have to learn how to use this. You also, if you're going to learn the profile and understand what it is, it's not an indicator. It shows us where volume dries up and where there was urgency. I know out here, and it's an area that the market can trade into this, and I know this is my intermediate time frame retail price, too high. I'm under it. I can look out here for continuation shorts, and I can also short it here too. But I also have to be aware of this. Subject to my plan, I can take it here, take my lumps with everybody else, or wait for this. And if it goes to zero without me, if I follow my plan, I'm good. Even if there's no trade, it doesn't matter. Remember, it isn't one trade. We all live and die on one trade. It's like everything else goes out the window. That's not our business. Our business is waiting for our edge. And if you don't have an edge here, then your trade's out here. And if you haven't vetted this, then you don't have a trade. It's that simple. You research it. You do replays. You watch streams. Watch the Trader Lab streams. There's a whole library of them. My primer webinar has about 34,000 views. There's a reason. Trading is not complicated, guys. It's random. There's a big difference. By the way, we're talking about Hyde. You guys heard the story of Jekyll and Hyde. Dr. Jekyll and Hyde. Hyde's a lunatic under the hood. Hyde is the primal wiring. The things that imagine this. How many times have you been, the voice in your head is saying, I know I shouldn't do this, yet you're overpowered and you do it anyway. You have to understand what that is. Do you know what that is? That's Hyde. But what is Hyde? Primal wiring, fight and flight. Be sure. So what is sure? Waiting for, quote, confirmation. What is sure? Is this trigger any more sure than getting short here when the market's moving? Who has more sure? Once selling it here or selling it here? What's more sure? Neither. They're 100% random. Then what are you doing looking to avoid risk? You're getting more risk. What am I doing? I'm taking less risk because I'm not sure, but I can't be sure with more risk. I mean, what does that sound like to you? Is that logical? So I know, not what will happen, ever. I know right here, I got my sellers. I know my sellers take control here. Let's look at the microstructure. Let's just look at this. Now, this is a short that I was just talking to you about. I'm also saying to you, this is a very aggressive short because the structured trade is more out here, but the market is in liquidation. If you're sitting short and your lunch is on the desk, what might you do? Might you take any counter rotation? Let's look at the microstructure. Now, what you're going to see me do is the stuff I do all the time. And what I'm doing, and let's even use this. Here, go here, doesn't matter. The micro high volume is in here. And again, no clue, right? I always like to say I'm clueless. It's more of a mantra for me because anytime I think I know what's going to happen, I'm now becoming like average retail traders. I'm predicting. I only know what might happen and where. See, and where it might happen is only an area. It's not rigid. But this is a short. Now, right here, no clue. Sellers get below the buyers. I'm outside, and this is where I'm looking for my short. Don't forget, this is my area. And all this is a range. But my sellers take control here. So right here is my mean in the microstructure. Remember, reversion. If this trade works, this is reversion. So what I'm trying to do, if it comes back here, I can sell it here, put a stop here, or if I'm more advanced, I can try to sell it here, but I could sell it there. I can sell it there, and my stop's got to go up here. I assume anytime I put a trade on, I'm going to be stopped out. It's part of the protection for me mentally. And I know if I come here and I take a stop, here's my choices. My stop is out here above the liquidity. And if it comes out here and I get selling here and my stop is out here, and again, trade plan specific, I can add, or I don't take this trade at all and I wait for this and I got nothing else to do. And I'm trying to go there. That's as deep as this is. And after that, I'm sitting here with you going, I don't know. Where else can I sell this, by the way? There, right? So right here in the microstructure is too high, reversion there. And if this works, it's going there. So I have to get risk neutral. And I know I'm in a location where I have greater risk. If I have the ability to read it, which I do, and I will take stops, not a problem other than how I, quote, feel about it. I get taken out, I'm putting the trade back out, and it's not a recommendation. This is where I'm trying to go. So whether I get short here, I'm going there. Target. And my job here is to get risk neutral subject to number of contracts, go here, fall out the bottom. Or just go there. Trade can be done. And I'm just trading a piece. I can do anything, and I'll take a stop. We have to get over it. Overhead and cost of production. Does that make sense? Please give a like if you're visiting in YouTube. Hope you got something out of this. Dylan, if you're interested, Bookmap right now is having its end of year sale, Black Friday. There it is. You can save a substantial amount of dollars. I think anybody who's interested in a high tier order flow tool, this would be where you can do it. 60% off on a month-to-month thing. You could try it for a month, see what you think. There's a lot of education, and I'm going to say to you, you can't learn this thing in a month, but you could kind of see based on all the education, and there's tons of education at Bookmap. Bookmap invests in traders' success. If you succeed, they succeed. What company do you know that's making an investment in you? You've all made an investment. Well, here's a company that makes investments in traders. Maybe that's something that could work for you. Please give a like on your way out. Review this stream and the other streams over this weekend. There is a library of webinars and a document section, as well as the Trader Lab community. It's open to all of you at no cost. Use the link in the bottom of YouTube. Visit Trader Lab, say hi. Thanks so much for visiting the lab today. Appreciate you guys. And don't forget to like, support the stream. See you on Monday. Trade safe. And if you don't have a plan, come to Trader Lab. Maybe we can help you move your business forward.